Well, it's time to take a look at the markets then. Thin trading today as Asia and Europe lacked direction from Wall Street, which was, of course, closed on Thursday for the Thanksgiving holiday. The trading week still solid, though, due to hopes of a U.S. Fed cut in the coming weeks. Jameel Ahmad, as always, our chief analyst at GTC, is standing by to take us through the numbers. Hi, Jameel. So slow trading today, as I mentioned, but a fault at a data center caused some major disruptions for trader as well. How is that factoring in?
Thank you, Aaron. Yes, so we had a bit of a surprise overnight in the early hours of Friday trade with what appears to be an issue in the data center. And we have to now wait to see whether Wall Street, which is set to enter a reduced trading hours today because it's the day after Thanksgiving Friday, whether there's any impact on trading there. But typically speaking, before this data issue, financial markets were in a relative, I would say, somewhat of a groove, seem to be rebounding in sentiment when you consider we've been speaking for weeks now about Fridays and investors being taking profits off positions and so forth. So before this issue, sentiment was looking a lot more positive. I think there's a number of different reasons why sentiment was looking positive, but we also have to take into account that December is the historic Santa rally month for financial markets, and we're actually in the last trading day of November today. So I just wonder whether investors might be tempted to take some profits off positions and then review what might happen next month, where, of course, we're looking at the US Central Bank very closely.
Jameel, global markets, meanwhile, are recovering in recent days from that broad sell-off that we had seen over these past few weeks, notably linked to fears of an AI bubble. So what exactly is going on?
I think this is the first Friday in roughly a month that we've had some positivity when it comes to the financial market atmosphere. I would look very closely again at the US Federal Reserve, which is the US Central Bank expectations, because I do not think it's a coincidence that we were having this interview just a week ago. We had expectations of the US Central Bank cutting interest rates dropped to around 30%, which was an alarming drop. And then we saw that quite a big shakeup in financial market volatility. Earlier this week, we had some, let's say, more soothing comments from different voting members of the US Central Bank suggesting that an interest rate cut in December is not completely off the table. And as we have the interview now, we're around 80%, 85% likelihood of an interest rate cut in December. So I think that as long as the Federal Reserve, the US Central Bank, continue to suggest that an interest rate cut is possible in December, perhaps it might potentially be pushed back into early next year because of the US government shutdown. But as long as they show they are still looking to cut interest rates, I think that's still the key ingredient now to financial market sentiment, particularly with global markets showing a more positive rally as we head into the Christmas season.
Jameel Ahmad, thank you very much.